Welcome to the System Simplified podcast, where we feature top leaders who share stories on how to successfully systemize a business. Now, let's get started with the show.
Hello, Adi Klevit here with the System Simplified podcast, where we interview top entrepreneurs, founders, and thought leaders about systematizing a business. And this podcast is being brought to you by Business Success Consulting Group. At Business Success Consulting Group, we create custom processes and tailor-made business systems so businesses can thrive and grow. All right, so I am very excited to introduce today's guest, Michael Oberther from Supporting Strategies NYC. Hi, Michael.
Hi, Adi. How you doing?
Good. How are you doing?
I'm excited to be on your podcast.
Great. Well, we're going to have a great conversation today because today we're going to talk about systematizing your finances and your bookkeeping area. So of the business. So either using a bookkeeper and using systems in order to use an external bookkeeper or doing it in-house. And we're going to talk about the two options and what are the best systems. So first of all, Supporting Strategies NYC is a national bookkeeping company. You are based in New York City, but you service businesses all over the US.
That is correct. So we're actually a franchise. So our office is in New York City. Our franchisor is in Boston. But yes, we service the entire country.
That's amazing. Awesome. And before we start, we also need to give a big shout out to Dara Fitzpatrick, who introduced us from the Tabush group. And he's the one who connected us. They're also based in New York. And he made that introduction. And I'm really, so thank you, Dara. And
thank you, Dara.
That's right. So good. So now that we have that out of the way, let's start talking about systems for bookkeeping. So let's talk about let's start from the broad picture. What are the different areas that when we say bookkeeping or financing, controller, accounting, what are the areas of the business that touches or is involved?
Yeah, that is actually a tremendous question. So we come across businesses at various levels of development, right? Some are very, very new and just getting started, and some are very developed with 30, 40 million in revenue. And what we've noticed is that at all levels, there is a common question. Michael, what is the difference between a bookkeeper, a controller, a CFO? And most people know what the CPA is. But that CFO, controller, bookkeeper scheme, if you'd like, I can take you through a quick explanation. So I think of it in terms of time, right? So bookkeepers are historians. They are looking backward at the previous period, which is usually 1 month. And they want to know, what were your expenses? How much revenue did you have? Right? Really core items. And they provide very core and basic reporting. Your balance, your profit and loss, and your cash flow analysis, right? Just very important core things. The controller, they're living in the moment and they're looking forward usually up to a year. And they're concerned with billing your clients, making sure you're getting paid for the work that you did. They're looking at your cash flow to make sure you're not going to run out. They're managing payroll, benefits, insurances, paying your sales tax, that type of thing. A CFO really should be 100% strategic. They're going to care about the processes of the bookkeeper and the controller because their work of the bookkeeper and controller actually allows the CFO to do a great job. But the work of a CFO is way down the road, 3 to 5 years, big strategic thinking, arranging financial relationships with banks and other investors, looking at what needs to happen to scale the business. And then, of course, the CPA, they're sort of working both in historically and forward. They're looking back, seeing where they can reduce your tax liability, but also looking forward to see what strategies they can use to reduce your taxes going forward so you can continue to grow. So that's how we look at the team. And we're the bookkeeper and controller.
Makes sense. Makes total sense. So, I had just a few weeks ago, I recorded a podcast with a CFO and we went in detail in terms of the role of the CFO. But now I'm really excited to actually go over the details of a role of a bookkeeper and a controller, because that's definitely very, very important in a business. So let's go a little bit more deeper dive in terms of the different aspects of the business that the bookkeeper and the controller are responsible for.
Yeah. I can go over something very general, but what we care about, what we're dealing with most often, it just starts with the transactions that a business creates. It's a very unsexy seeming thing. We're looking at bank statements and credit card statements, and we're bringing that information into a general ledger like QuickBooks or Xero or something and making sense of it, right? The business owner is concerned with, well, these are my clients. I have 5 clients. I did this many hours of work or completed these projects. How much revenue did I earn? Right? The bookkeeper is not even necessarily concerned yet with if you collected that money, but what did you earn? What do we need to bill the client for? The reason that is so critical is that cash and revenue is at the heart of this. And the bookkeeper is that first layer of what did I spend? What did I make? How much do I have right now? And usually the business owner from that point can go and make some decisions about their business. What do I need to spend on? What investments do I need to make? Can I afford more marketing? Should I hire someone? Right. So it's very, very basic work in the beginning.
And to your point, it's really about knowledge, right? It's about empowering the business owners so they're knowledgeable of what's happening in the business, about their finances. Because, if you have a business and you don't touch the books for 6 months or a year just before tax season, then you really have a hard time making the right decisions in real time. And I've seen it over and over again with clients that when I start working with them. If they don't have a system on how to actually keep track of their numbers, on how to actually see what their numbers mean, on how to make decisions, then the business cannot grow and scale, because you are basically, it's like driving without seeing, basically driving blind, right? Not only don't have the dashboard, but you don't have anything. You don't even have mirrors. You don't have the windshield. You just don't see. It's kind of like, you're just driving blind, completely blind, and hoping you're going to make it to where you want to go. And usually what I see, and correct me if I'm wrong, when people don't keep their numbers, so the bookkeeping is not up to date, they also don't have long-term goals, right? I mean, the goal will be basically to get through another day, but not really, okay, in a year, I want to be in such and such position financially, because they don't know where they're at right now. So that's also the importance of keeping those numbers so you can actually set up goals and go there.
Absolutely. So there are 2 things that I hear pretty regularly from newer businesses who are driving blind. I like your description. One is they say to me, Michael, I have a pile of money in the bank, but I don't know what's taxes. I don't know what's sales tax. I don't know what's mine. I don't know what's pay. I have no idea. I need it decoded. Right. And so great. We love hearing that, because it means the business owner has reached a point where they realize the value of record keeping, how it's going to help them make decisions in their business. And that is the kernel of that long-term strategic planning, like you mentioned. The other common thing that we hear, and this is from people maybe a little down the road, but they're trying to figure all this out for themselves. And what they ask for is, I need some structure. I need a plan around how all this gets done. They're asking for the same thing, but it's 2 very different personalities. And it's fun to work with both to help them kind of take that leap. I can go over the 2 different personalities if you'd like, or if you want to.
Yeah, for sure. I would love to hear about that.
Yeah. So, and disclaimer, this is a highly generalized comment, but I have heard the pile of money comment from a lot of creative companies. We do a lot of work with creative companies like web design and PR and experiential marketing and stuff like that. And many times they have terrific cash flow, right? So they're not coming to me with the pain of, I'm running out of money every month. That's not their problem. They have plenty of money. The problem is they don't know what it represents. And they've been doing some sort of creative work their whole career. Accounting couldn't be further from their interest. It's something so far out of bounds for them. They just literally don't care. And that's fine. That's what bookkeepers are here to do. And they just want it decoded. I don't even care how it gets done. Just, can you do it? Great. On the other end of that spectrum, there's the high detail engineering, software development types who are more, they know they have a pile of money. They kind of know what it represents, but they just have no structure to it. So they're not reviewing their reports at any particular time. They don't have maybe a great system of leadership meetings to discuss finances. They're not billing their clients on a regular basis. They have no process of follow-up. So their accounts receivable might be growing, right? They have more specific complaints. And both of those challenges are great. It just means that your business is growing. And a good bookkeeper should be able to step in and figure it out for you within, especially if you're a smaller business, a month to 2 months maximum, right? So no matter how in the dark you are to your bookkeeping, no one is that far away from clarity. You just need to get started at some point.
That's good. That definitely sounds like I can relate to it. I can see it for sure. But you also have those two types, but then you have like the type also that, they feel like they're running out of money, right?
Well, yes. I mean, that is an all too common challenge. And it's not that a lot of conversations that we have are caused by cash flow challenges. I don't want to say bad cash flow because it's not really good or bad. It's just it's the nature of running a business. Cash flow is a challenge. Sure. But building that structure and understanding what that money represents and reporting on it over time is actually the first step to taking control of that cash flow. And, if you've been talking with CFOs or other business strategy folk, that's the first thing they want to see. Great. Show me your P&L. Show me your balance sheet. Because then they can see like, wow, you have 5 different lines of revenue. On 2 of them, you have a 40% margin. On 3 of them, you have an average of a 15% margin. So let's talk about these 2 high margin activities. How can we get more of that? And that may seem obvious, but in the day-to-day grind of running a business, which is very hard and emotionally taxing, you may just be taking what's coming and be grateful for it. And without another voice to say, hey, let me help you focus here a little, you may get stuck in that cycle of bad cash flow. There are other elements that can lead to that, right? If your accounts receivable is constantly growing because you're not getting paid on time or at all, there's specific things that a bookkeeper can come in and help you build out a good structure around. But it's really those 2 things. You need a little strategy and a little structure if there's a real cash flow problem.
Absolutely. And it's empowering. It's knowledge is power. And that's what we need in order to make the decisions and look at the root cause of why you're running into cash flow problems, especially if you have a good business that you think it's growing, you get more gross income. So the top line is growing, but then you're running out of cash. What is happening? I mean, it can be also mismanagement. It can be mismanagement of money. It can be somebody is embezzling. It can be just you're not pricing it correctly. And there are so many reasons, but if you don't have the numbers in front of you, it's hard to figure it out. And one of the systems that I recommend is having a financial meeting every week or it depends on the size of the business, where you actually look at the numbers, you figure out what's going on. But in order to do that, you need the data, and that's what you get from a bookkeeper or a controller.
Absolutely. And one of the main things, and I'm sure you can comment on this, one of the main things for many of our clients across many industries, they're project-based. That could be construction, that could be websites, that could be legal work. But tracking your time and tracking that up to a project is incredible. It's a huge step, right? It's something that you grow into. I do talk with a lot of like new solopreneurs who maybe in that stage of their business development, they don't really understand why that would be a great thing to do. But it is a great thing to do. Track your time, assign yourself a billable hour. Like, what do you cost? Because it's the only way for you to eventually understand if you can hire an employee and put them into that role and what that employee represents. If your billable hour as the partner or the owner is $100 an hour and your associate can be $50 an hour, well, maybe there's an additional value that you can deliver to your clients, right? So it becomes a strategic action, but you got to start doing it just so you understand where you are as a business. It's those little things that add up over time. Is that something that you work with your clients on, Adi? Am I allowed to ask you questions?
We create the systems, absolutely. So, it's in terms of the systems in bookkeeping, for instance. So you have accounts receivables, accounts payable, And you have, I mean, it's more of a controller / bookkeeper. So you have accounts receivable, accounts payable, and the actual bookkeeping part where you actually maintain the records and create the financial reports, right? So each one of them has to have a very well-defined system. Like, what is the system for accounts receivable? Like, what's your collection policy? I mean, if somebody owes you money more than 30 days, what do you do, right? I mean, assuming that you carry a balance. If somebody doesn't pay you after 60 days, what do you do? We work with many of our clients that we work with actually establishing that system. And we work together with the CFO or the controller to see what works, but we document it so then they can follow it, right? So there is a system. Accounts payable. What's the system for accounts payable? Do you use a system, an automated system? If you use a bookkeeper, an external bookkeeper, what's the system of actually getting them all the bills and the receipts? So it's all documented and followed, so there is no confusion. Because sometimes I tend to see in that area of finance or the accounting or treasury a lot of confusion, right? And there is confusion, and then it's just being shoved aside and not looked at. But that's an area that's kind of like, I see it as a vital organ. I don't know if it's the heart, but it's definitely a vital organ that you can't do without. Maybe it's like the liver because it's processed, it's whatever it is, but it's kind of like, you have to have it, because without that, you are lost. That is your navigation tool. That is how you make decisions. So definitely, I'm very big on creating accounting systems that work and being followed by all. So with that, let's talk about some of the accounting systems that you would recommend that people will have in their business. And I'm not talking necessarily about software, but I'm talking more about what are some good processes to have in a business that you are looking at or you help businesses implement so they will have those systems in place?
Yeah, well, right at the top of that list is getting paid on time. Number one for us, top of the list. Okay, you earn the money, you dedicated the hours to it, you have expenses related to it. Let's get the money. That's step one. And so accounts receivable, AR management is a big deal to us. Whenever I meet with a business owner who has, if AR comes up, I'll definitely ask what percentage of your total revenue is in accounts receivable. And I've heard some pretty big numbers. But it's exactly as you said, Adi. There is no process. It's always an issue with process. So with AR, we are concerned with billing on a very regular schedule, right? If these bills have to be created manually, let's set a date that these bills are going to go out each month, or 2 dates or 3 dates, or whatever the process is going to be. But it has to be the same every single time. And it's not just so that it becomes so that it gets done by the business, but it's also about creating habit with your clients, right? Your clients start to know, like, oh, they send it on the 15th. It's here every morning, 8 a.m. I see it. There it is. And whether they pay it or not is a different issue, but they know it's coming. So there's a little trigger in their mind. But even the little things on your invoice, right? We use a million different billing software, but there is a place to list your terms. There's a place to have a memo. There's a place to have details about the work you did. It helps to use some detail. You don't want to have 1,000 line items in your invoice unless it's absolutely necessary. But you want to use those little areas where you can create a little bit of personality, build a relationship with your clients, be consistent in asking, and having a great follow-up system around that invoice. We sent an invoice. Great. An email should go out. Hey, we sent an invoice. 2 weeks before it's due. This invoice is due in 14 days. It's different for every client, but we want to track that process of communication from start to finish. It's different for every business to a degree because they have different relationships. But we track it all the way out to, well, Mr. Business Owner, when does this become critical for you? Is it at 30 days, 45, 90? When do you start to get angry, right? We don't do what I call hard collections. We do accounts receivable management, which is friendly, relationship-focused reminders.
Right.
But we have partners who are aggressive. And if our clients get to that point, it's their choice, right? I'm sure your clients have the same ongoing relationships like ours tend to do with their clients. We don't want to upset the apple cart. But that's at the top of our list of of processes, followed very closely by accounts payable.
Good. So let's talk about accounts payable. So that was a great process you just laid out in terms of accounts receivable. And I like it that you're talking about how you have a system on how you write the invoice, when do you send the invoice, when do you actually call, how do you follow up? Let's talk about accounts payable and how do you deal with that?
So it's a little bit different, obviously, because bills are due at different times, 1st, 15th, or the 30th. There's different terms. And then when you have cash flow challenges, obviously your timing of the payments becomes very critical. Even to the decision of, well, who are we not paying, right? And that's the conversation we have to have with our clients. But let's pretend cash flow is normal and it's about paying the bills. This is very simple for us. If we're making ongoing payments to an existing debt, great. Are we paying the minimum due, or is there another amount you want us to pay? But whatever that is, we're paying it. We're making sure that arrives on the day it's due. Money is not leaving your account any sooner than necessary. And it may not make that big of a difference, but over time it can. And when cash flow is very tight, giving yourself a 3-day window where you have money in the bank can make all the difference if it's coming up against payroll or some other major expense. So the accounts payable is actually a little bit more complex than AR, I think, because you have different factors. These are relationships. You want them to serve you well. These are your vendors. These are people you're relying on really to run your business. So if you don't pay them, you better call, let them know I'm having challenges. This is my plan. And then you follow through on your plan. Now that we are comfortable with that as bookkeepers because we have to do that every day. We recognize that our clients, that is a new thing, probably. Because in your personal life, I think most of us are pretty used to paying our bills on time. It's just the way it goes. And when we can't, we may choose to hide from it a little bit and pay a late fee. But in business, it's very different because if your vendors are upset with you because you didn't pay them on time, but you rely on them to execute your service, you may be heading down a very dangerous path. So I know that's a little all over the place, but there are so many variables in the payable side that that's how we approach it. It is very
but it's good, and it's good to have somebody who is responsible for it, because sometimes we tend to shy away from things that are uncomfortable or go, okay, well, I better go make the money so I can pay the bill and then forget about it. And then you're right, it can ruin your relationship with your vendors, and especially nowadays when it's not sometimes. I mean, in certain industries, we have some supply chain issues, etc. You want to maintain really good relationships. So when you need something, you're going to get it, as opposed to if there is a scarcity or not enough, they're going to give it to those people that are actually paying them, right? So it's a lot of building relationship, maintaining those relationships, and paying on time, but also making sure that you are managing your cash flow. So I agree. That's definitely. There has to be a system. There has to be a system of when you get a bill, what do you do with it, right? There has to be a system for purchase orders. Right now, I'm working with a client on creating a system, documenting their system for purchase orders. He's a contractor, and we realized that they don't have a system for it. So we are going to actually implement that system. They are writing it, and then we're going to help and implement it and make sure it's followed by all, because otherwise money just goes out the door at random places, random times during the months with no control. And that can lead to a cash flow crisis as well. So there are definitely many systems in accounts receivable. I mean, accounts payable. Payroll is part of your accounts payable. I mean, it's money that you pay to your employees, right? Or taxes. So all of that has to be part of the equation of what's your system for payroll? When do you collect the hours? Who approves it, etc. Right?
Absolutely. And maybe the most critical as far as accounts payable, that structure really matters, because if things are tight, if you're doing it right, you can do a payables reconciliation very quickly. You can match it up to an expected revenue or revenue like your AR, and you can get a good picture, a snapshot of your cash flow, and you can make decisions. But if it's random, you have no hope. You're probably going to run out of money.
That's right. And then there is, of course, the part of the bookkeeping and the controller is to provide accurate financial reports which we already touched upon. So it'll be the profit and loss, the balance sheet, the the cash flow. So definitely those reports are very important. And I would love to go into a detailed explanation on each, and maybe we should record another educational podcast where we can actually explain what each one of those are, because they're not the same. And as a business owner, you definitely need to educate yourself of what is the meaning of each one of those reports and what each line item basically means, so you can make the right decisions. But that's why it's also important to partner with someone like you, so you can walk them through those reports and explain it to them, so then they can make the right decisions.
Absolutely. Any bookkeeper you're working with as a business leader, if you're new to financial reporting, you should have them walk you through those basic, the balance, the P&L, and the cash, at least a couple times until you're very comfortable with it and you understand it. I think of them as the reporting starter pack, training wheels a little bit, because it starts to give you the understanding. If you look at them at the same time each month, you start to see a little bit of pace in your business and rhythm in your business. A lot of the work we're asked to do, or I think the companies that we work with, the bookkeepers that are being hired are being asked to do, is a lot of project-based, client-based, project, expense, or profitability reporting, which is definitely a level up from those basic reports. But it's just another step in business development, and another step in becoming a savvy business leader is understanding, well, these are my clients. This is all the time I track working with them. This is the revenue I created. These are all the expenses to service these clients. Here's my margin. Now we can really start to pinpoint, maybe some of these clients aren't the best clients for me. Maybe I lose money on them, but it makes sense to keep them because they're a big name and I can drop that in a sales call, right? But you start to have this ability to make real decisions about who you're working for. And that is an exciting thing when we get the opportunity to help people do that. Do you see that as well? Is that something that you help your clients choose or make decisions about?
In terms of the finances?
No, in terms of their client mix and who. Yeah.
I mean, I'm not, our area of expertise is creating the processes and procedures and documenting them and making sure that they're being followed by all. Okay. I don't do the analysis of the margin and the client mix and who should they choose and whatnot, but we do help in terms of the process of the qualifying a lead, for instance. So we depend on other trusted advisors like yourself in terms of coming and saying, all right, so those are the clients, like from a financial standpoint, those are the clients that we want to work with. We'll ensure that the process exists in terms of when you're doing your lead qualifications, that you actually ask the right questions and you actually look at the right criteria and the right factors in order to actually choose the right client. So that will be part of the intake process, right? Or It can be also part of the annual review process. So whatever the process is there, we create those processes.
That's beautiful. So Similarly, we aren't trying to tell our clients what to do, right? We don't claim to be strategic, but we will show you the truth of what's happening and allow you to make those decisions for yourself. We partner very closely with outsourced CFOs, right? Their clients are oftentimes our best clients as well. There's a host of reasons for that. But the biggest reason is if they're investing in that level of outside support, they're definitely growth-minded. They're looking to build a plan for the future. And if they haven't taken action on good record keeping so far, they're about to, because their CFO is going to see the books and be like, whoa, we got to straighten this out.
No, that's a very good point. So let's talk about outside help. So in your opinion, what are the main characteristics of a bookkeeper? So let's say I'm a business owner, I'm listening to this podcast right now and I go, okay, yes, I do need to hire a bookkeeper either internally or externally. Or maybe you have a bookkeeper right now and I want to make sure that they're doing their job. What are the main characteristics that you should look for, that the business owner should look for in a bookkeeper to partner with?
Yeah. one of the things that I would concern myself with most if I were a business owner hiring a bookkeeper is a bookkeeper who has medium to large business experience at all. And the main reason for that is that they will actually know how more advanced record keeping is supposed to look when it's done. They understand the end product and how it's supposed to be. The mistake I see a lot of business owners make, and I know why they make it, and I don't blame them, is they often go with a too junior of an option to save money typically. But the problem is they may not have the experience to look at your chart of accounts, recognize the limitations, or if it's bloated, like too many categories, they're not going to be able to help you refine that. They may not understand how the structure of the chart of accounts is going to make the reporting look right. When you're looking at your reports and there's too many pieces of data and the KPIs, the critical pieces are buried in it, that doesn't make a review of your reports very successful. So number one, it doesn't matter if they're a solo, if they're part of a big CPA firm, understand what their background is and know that they've seen more complex bookkeeping than you need today. So they can help you build the foundation of a great program. We get a ton of business because people outpace the skill set of their current bookkeeper and they want more. So just go get yourself someone who can give you more than you need today. You may eventually outgrow them, but you want someone you can work with for a couple years. It's very disruptive to work with someone for 6 months, 8 months to a year. They're not working out for some reason. You go and you get someone of a similar nature and you're just streaming a bookkeeper every year. It's not good. It holds you back as a business owner. It's much more efficient. Just get someone great. Doesn't matter who they are. So that is my number one thing. Make sure that they can give you more than you need.
Good. So my question is, how do I know that I'm not getting what I need?
You want to, if you're interviewing bookkeepers, you just need to ask what their background is. Look at their LinkedIn, look at their website. Even a solo, they may not have a website, but they should have a LinkedIn and it should show, hey, I was a bookkeeper here. I was a controller there. I was a bookkeeper here. Ask them about that experience. Ask them, what was the revenue of that business? What was the transactional volume of that business? How many different lines of revenue did they have? What was the reporting expectations? What was the structure? When were those reports due? How many times a month? You may only need your cash balance and P&L, but if that person on the other end of the phone that you're talking to can answer those questions, you definitely have someone who's going to be able to ride with you for a couple of years before you need to upgrade. And you may never need to.
That's a great advice, great questions. But my question is also like from the end of the business owner, let's say I have a bookkeeper and I think it's okay, but how do I know that I'm actually getting everything that I need? Like what will be some of the things that I can look right now and ask myself those questions to know if I need to upgrade or I need to hire somebody else or I need to outsource?
So it is actually a challenge to know that. This is why you want to find someone who has a strong background. Because the only way for you to really know is at the end of the year when you bring your books to your CPA, they're going to look at it and be like, wow, this is disorganized. It might be worth asking your CPA to look at the bookkeeping mid-month or mid-year, just at a random time to see how many transactions are unclassified. If there's a lot of transactions in miscellaneous, or ask my accountant, that's a popular place to find things that haven't been managed right, and go through what those transactions are with your CPA. It may cost you an hour of your CPA's time, but they will uncover many of the weaknesses that may exist in your bookkeeping today. And then you can have a conversation with your bookkeeper. And the conversation with your bookkeeper doesn't need to be, it's not really necessarily a challenge. It's like, hey, what's happening that these things aren't managed? Do you need more of my time? Do you need a bigger budget? Are there not enough hours in the budget for you to ask me these questions? Like, have an open dialogue with them about it. One thing I've learned about, not all bookkeepers are super comfortable with confrontation, and they may not want to tell you, you hired me for 5 hours a month, but this is really a 7 or 8 hour a month project. They may not feel comfortable doing that, but as the business leader, you can take the lead on that and have that conversation and get a whole lot more out of your bookkeeper not have to change your bookkeeper, and just maybe increase your cost minimally, right? But retain that trusting relationship that hopefully you have.
I love it. Michael, such great advice. I mean, it's definitely, we can see that you're a true professional with a lot of experience in the industry. And those questions are great. The great questions that anyone can ask. They can ask themselves, am I getting what I need? They can ask the bookkeeper they're interviewing. And also, I would just want to add to the last thing in terms of like asking, am I getting, like, how would I know if I'm getting what I need? Is, can you actually make decisions? Do you feel like you have all the data that you need in order to make financial decisions? And if you say, no, I don't, so you are not getting what you need. And then we can go into those conversations. So, because the bottom line is, yes, you need your books in order. So, so you can file your taxes, and the CPA can do whatever they need to do tax-wise to be in compliance with the tax law and everything. But it's also, you need it in order to make decisions. You need it in order to drive the business forward, in order to lead the business correctly. And that's where you have to ask yourself, do I know? Or I don't know. And then we can go into those questions, and that will lead to a bright financial future.
Yeah, that is a great point. Am I able to make great decisions in my business? Yeah, absolutely.
So, Michael, how can our listeners contact you if they want to find out more, if they want to work with you, if they want more information? What's the best way to reach you?
I mean, email is actually the best way. I'm at moberther@supportingstrategies.com. I'm pretty open and active on LinkedIn. Michael Oberther on LinkedIn. I'm Michael, the bookkeeper, Oberther on LinkedIn. I'm easy to find. Happy to answer any questions that you have.
Good. So you can go on LinkedIn and say Michael, the bookkeeper, and it will pop up, right?
Yeah, there's only one.
There's only one. Well, that's a great way to find you. And then people can connect with you on LinkedIn, ask questions, message you, or of course, email you, because you have a wealth of information and you are so willing to share it and to make sure. I mean, we talked before the podcast, and you are very passionate to make sure that businesses are actually successful and doing well. So I definitely encourage our listeners to reach out and ask you questions and connect with you on LinkedIn so they can have that conversation with you.
Thank you, Adi. I appreciate it.
Yeah, you're very welcome. And thank you so much for being a guest on this podcast. It was definitely, you provided valuable information that I hope our listeners can just put into effect right away and really elevate and get their bookkeeping department to a whole new level.
Absolutely happy to help in any way. Absolutely. Thank you so much for the opportunity. It was great speaking with you. I love this. Thank you so much.
You're very welcome.
Thanks for listening to the System Simplified podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.